Back. We now officially have less than a week until the tax deadline. If you're like me, I've been trying to get all the things together. But if you are expecting money back, there's a lot of things that you can do with the extra cash, including invest it. That's exactly what this week's Your Money is all about. Gordon, before we even get started, what are some things that we should be thinking about before we even start the investing journey?
The best first step that I always like to tell people is try to figure out what that money's for. What's your goal with that money? And that will dictate where you invest that money. A lot of people skip that step. They just think, oh, I need to be investing money. They might put it into stocks. They might put it somewhere else. But I like to challenge people. Think about what that money is going to be for. Is it for your first house? Is it for a new car, family trip, or is it for retirement? Because that goal will dictate how much risk you're willing to take on and where you should put your money. So that's a great thing to be thinking about first before you make any sort of money decision.
You know, it's so interesting. I feel like one of the first questions people ask is, where should they invest their money when they're starting out? What did you find?
Yeah, I guess first thing too is also like to know what types of accounts are out there. If you're investing in retirement, you know, your company's 401k, make sure you're getting that match is a good place to start. IRAs, Roth IRAs, but if you're not looking for retirement, you can open a brokerage account. You're not going to get the great tax benefits. You're going to be paying, you know, taxes on the money you make, but it gives you the flexibility to do basically whatever you want with that money. It's more of a short-term type of investment vehicle, and you can get brokerage accounts through some of the big investment firms, some of the apps like Robinhood, Webull, things like that. And so that's where I think if you're not planning for retirement, that's a good place that you could park some of your money and start investing.
It's so funny. When my friends and I started talking about this, I was like, oh man, we are adulting hard right now. This is real adult conversation. So let's say if we choose the stock market, how do we avoid losing too much money to a single company?
And I would say, if you're starting out, don't invest in a single company. Because I think a lot of people who are beginners will be surprised to see how much the prices go up and down with individual stocks. There's a lot of movement, a lot of changes, and a lot of big decisions that these companies are making. So you could see it go, you know, 5–10% in a day or a couple of days. And if you're not used to that, you know, you put $1,000 in and suddenly lose $100 in a day, it could be kind of surprising. So to kind of minimize that risk for beginners, you might want to start out with a fund where you're investing in 100 different companies, maybe 500 different companies. With the S&P 500, you can invest in a fund that will invest in all of those companies. If you really want to take the next step and explore a single company, I'd recommend starting out with just maybe like $100 or money that you could stand to lose.
Absolutely.
Because it is more risky when you're going with one stock. As you get more experience, maybe start dabbling a little bit more. But for beginners and you're learning about the market, I would go with a fund, because then you can be more spread out.
Yes, choose the thing that allows you to still buy your groceries. That's good. Adulting, it's hard sometimes. Gordon, thank you so much. And of course, we have even more investing tips in this week's episode of Your Money. It's available on KARE 11 Plus right now.